Mukesh Gokhale from Mumbai has a query. Let's listen into this.
I have bought 50 shares of Schaeffler India, around 7,100. I had bought it in view of the corporate action. Is it still a hold at this price, or should I profit?
Well, you are sitting on a couple of thousand rupees of profit out there, but I think while you did buy because of a corporate action event, I think it's a good one to keep in your portfolio, having already acquired it. Because as you know that it's the erstwhile FAG bearings, Schaeffler, but it now has a very good parentage in Schaeffler and a good transfer of technology coming in from there for the launch of new products. And I think Schaeffler's got a good mix of businesses. The auto business where it makes a lot of engine parts and transmission equipment for auto OEMs, but it also has a very good industrial business where it makes a lot of electrical fittings for non-auto companies and even the railways. And I think the two parts put together, the auto and the industrial parts, together make up about 90% of Schaeffler's business, which is growing at 25% plus every year. And I think they will continue to grow at that kind of a clip. Not much debt in the balance sheet. It's excellent return profile, return on equity of in excess of 20%. Good parentage, as I said. And the only problem is the stock is up 70% over the last 1 year, so it could consolidate from time to time. But it's not a wildly expensive company. I think it trades at about just around 30 times 2023 earnings. So for a company with MNC pedigree, with the kind of growth metrics that I just spoke about, and diversification of business, I think you would pay that much for that kind of a name. So I would say there should not be any major hurry to dispose of the company. If you're a longer term investor, this is the kind of stock you could easily own in your portfolio.
All right, let's also go across to Sahin Sheikh from Berhampur. He's got a question on Happiest Minds.
Hi Udayan. Currently, I am holding the Happiest Mind technology stock and plan to hold for a long term, like a decade or 20 years. Is it right stock to hold for a decade? Please tell me.
Well, a decade's a nice kind of a horizon, though I think periodically you'll have to check how the company is moving. Speaking of a decade, the owner of the company, the promoter of the company, Ashok Soota, told us just a couple of weeks ago that he intends to grow, or he's projecting that the company will grow its earnings by more than 25% over the next 10 years. I mean, that's a bold statement, and 25% growth over 10 years means the stock goes up 10x just on earnings. So I think it's a good company, and part of the growth comes in from the fact that, you know, it's a smaller company. The Infosys and TCSs of the world are so large that the base on which they have to grow is humongous. Happiest Minds is just a $150 million technology company. So, you know, it doubles its revenue or profits. It's still a $300 million company. So I think it's got a long runway given its size, and it's a pure digital play. So that is a basket, or that's a market which is really growing very fast. And a pure digital play company should be growing at faster than industry growth rates. So the only problem is valuations. I mean, you would have noticed that a company of the pedigree and parentage, promoters of Happiest Minds' quality, has actually done nothing for the last 6 months. It's actually down on a 6-month basis when IT as a sector has done so well. I think part of the reason is between Jan and June last year, or Jan and July last year, the stock actually went up 4x from 350 to 1600. And I think it's therefore spent the last 6 months just consolidating those gains and has not delivered any returns. At some point, earnings would have caught up and the stock will begin its upward trajectory once again. So I think for a patient investor like you, you should not get nervous about this 6 months of no returns.